Good morning, everybody, and welcome to the Real Estate Walk and Talk. Today, we are going to be answering the question that is on the minds of all investors out there. Actually, it was a question that was just posed to me by one of our current clients, and it gave me the inspiration. Is cash-on-cash return a great metric to look at when investing in a rental property? Is it the best metric to look at when investing in a rental property? See, we got Dom Felix watching right now. Good to see you, buddy. So is cash-on-cash return the best metric you should be looking at? Well, here's the deal. Cash-on-cash return is a good metric to look at because what cash-on-cash return tells you is if you're going to get positive cash flow on a monthly basis from your rental property. So here's how you calculate cash-on-cash return. You start with the gross rents that are collected. Then you subtract out your principal, your interest, your taxes, and your insurance payments every single month. You take away your maintenance costs, you take away your vacancy costs, you take away your property management fees, and all that leaves you with what's called net operating income, or your positive cash flow. You take that, you annualize it, and then you divide it by your down payment and your closing costs, and that gives you your cash-on-cash return. All right, for everybody who's joining now, we're talking about cash-on-cash return, and is it the best metric for you to look at when analyzing your rental property investment? So that leaves you with your cash-on-cash return. So it must be positive for you to invest in a rental property, but here's the downside. It's a limited metric because it only takes into account one of the profit centers of rental property investing, which is positive cash flow, and it typically only looks at the first year. So you're not paying attention, if you use cash-on-cash return only, you're not paying attention to the other profit centers, all right? The other profit centers, and if, Dom, I know you know about other profit centers, put in some other profit centers here on the Facebook Live, other than positive cash flow. And I see we've got Cheryl watching. Cheryl, nice to have you here. You're a new voice here, a new face on the Walk and Talks. Go ahead and put in what you think the other profit centers are for rental property investing. It only takes into account one, all right? So the other profit centers, boom, Daryl Thomas showing up right there. Home price appreciation. You know that's a big reason why people come to invest in Jacksonville, right? There's tax savings. There's principal paydown. Home price appreciation like we were talking about. And then there's the benefits of taking out smart debt and what inflation will do for you as it rises your rents and it devalues the cost of the debt for you over time. So these are all profit centers. And cash-on-cash return just doesn't typically look at that. So most investors fail to realize that. The other thing that most investors fail to realize is that cash-on-cash return, the positive cash flow, when you look back at your investment 10 years or 20 years down the road, after holding on to this asset, your positive cash flow is going to be one of the lowest contributors to your overall return on investment. I'm going to say that again. Cash-on-cash return is what everybody pays attention to, but it is going to be one of the lowest contributors to your overall return on investment when you hold on to a rental property for 10 years or 20 years, right? So why does everybody pay so much attention to it? Well, it's because it's easy to calculate. That's why most investors do it, but they fail to see the big picture. See, home price appreciation, when you invest in a growth market like Jacksonville, home price appreciation is going to be the biggest contributor to your overall returns. So you've got to be able to take this into account, right? What I do when I look at a rental property investment is, number one, I want to make sure there's a positive cash-on-cash return, because positive cash flow is your entrance fee into getting into this game, in my opinion. It has to pay for itself every single month. And then after that, I ask myself other questions, and you should too, that are going to help you unlock the other profit centers, right? What is the historical home price appreciation rate of the city that I'm investing in, right? What is my principal pay down going to be each year, and how will that contribute to my overall returns, right? What type of inexpensive debt can I secure for this rental property investment? And then how am I going to benefit from that long term as inflation happens and rents and prices go up, but the cost of the debt stays the same every single month, right? These are the questions that you need to be asking yourself, in addition to cash on cash return. So is cash on cash return the best metric out there? No, right? Is it an important metric to look at? Absolutely, but it's not the only metric to look at. And welcome to everybody who's walking with me right now. We're talking about cash on cash return. And the question is that the best metric to look at when analyzing a rental property investment? Well, it's not the best metric, but it is a really important one to look at, right? But you can't just stop there. You've got to analyze the other profit centers when making your decision on when and how to invest in rental properties. Internal rate of return is a great metric. It's another metric that you should look at that takes into account these other profit centers. And so you should definitely calculate your internal rate of return. That takes into account what you expect to sell the property for and at what time period you expect to sell the property for, right? So you're going to be able to get a better picture of all of these profit centers. So the only problem with it, internal rate of return, it's complicated to do, right? It's too complicated for me to even walk you through in this Facebook Live. So just go to Excel or Google Sheets or whatever. The formula's there. It's easy to do when you use a program like Excel to calculate internal rate of return. And that's going to give you a better picture and help you make the best decision. So don't be like most investors out there. They have cash flow blinders on. They have cash on cash return blinders on. That's all they look at. And, 10 years down the road, 20 years down the road, if you only make decisions based on cash returns, you're missing the bigger picture and your returns will suffer. So there you go. There's the answer to the age-old question there. We've got Marilyn Cotterman chiming in here. She said the interest rate is important. Absolutely, right? You've got to look at the smart debt that you can secure and understand how that's going to positively impact your ability to create returns long-term, right? Daryl Thomas asked me to explain internal rate of return. Basically, it's the net present value of all of the future cash flows that you would be earning from your investment. So you basically put a simple chart together, and you can Google this as well. So it's very easy to do there's many videos on how to do this, but in Excel, you put a chart together, you put your cash outlay the first year, and then every year coming in, you might have, $2,500 or $3,500 in positive cash flow coming in every single year. So you've got those cash flows coming to you. And then when you sell maybe in 15 years, you've got this inflow of capital and cash as well. And IRR basically calculates the net present value of all of those future cash flows. All right, we've got Tim Beaver watching. We've got Mark Riddell watching. Nice to have you, Mark. You're a new face here on the Walk and Talks. Nice to have you here live. You said cash flow with appreciation. That's the name of the game. That's why people come to Jacksonville. So I'm going to be jumping on live here. I'm 2 minutes away from jumping on for the pre-meeting for our JWB Not Your Average Investor show. It's actually going live at 12:30. I'm jumping on and do a little prep work with Pablo, the host. So that's today at 12:30. We've got an awesome guest. If you want to join us live, you can go to jwbshow.com, and I'll see you there as well. Have a great day. Take care, everybody.